Let's take a look at PLTY, the Yield Max Palantir Option Income Strategy Exchange Traded Fund, or ETF. At first glance, the chart looks pretty rough. After a solid run, PLTY topped out around 73.46, then pulled back hard. It just bounced off the 38.2 Fibonacci level. Now look at this big red volume spike. This looks like a classic breakdown, right? Price lost the uptrend channel and sliced through the Fibonacci retracement. Textbook signals that suggest a reversal. And it doesn't stop there. The bulls and bears blue light flipped bearish. The check-in money flow turned negative, indicating signs of distribution. MACD is rolling over. Stochastics, high in the overbought region, is heading down. And the spike in volume? That looks like institutional selling. So yeah, most traders would call this a breakdown and a reason to get defensive. Now, I'm a technical trader, and I live and breathe these charts. I believe price action tells the story better than anything else out there. But part of good technical analysis is knowing the context, what's happening fundamentally, not just in the broader market, but in the specific stock or fund we're analyzing. And importantly, that includes dividend events. Here's the detail most people miss. Yesterday was the Yield Max Palantir ETF's ex-dividend date. If you're not familiar, the ex-dividend date is the cutoff day. If you held shares before the market opened on that day, you get the dividend. But here's the key. At the open, the price of the fund also automatically drops by the amount of the payout. And in the Yield Max Palantir fund, that's a significant amount of money, so the drop is very significant as well. That's not a sell-off. It's not panic. It's just simple mechanics. All that's happening is Yield Max is taking the previous profits out of the fund and distributing them to the shareholders. Isn't that why you hold these Yield Max funds in the first place? To get the big dividend? So if they take that big dividend out of the fund and give it to you, that sell-off of the funds is going to be reflected in the net asset value price of the fund. Those last two big down candles and that big red volume bar, that heavy selling, that's just the market adjusting around the dividend, nothing more. Now, let's compare that to the underlying stock, Palantir. Look, no breakdown, no panic sell-off. Not yet, anyway, with volumes right around average. If this were a real sell-off, we'd see confirmation in Palantir itself. But we don't. The only so-called crash is in the ETF that just paid shareholders. And that's why you've got to zoom out and take the full picture into consideration. Charts matter. Big time. But so does understanding what's happening underneath the chart. That's how you avoid getting faked out by mechanical moves like this one. The real test is what happens next. If the price stabilizes or rebounds in the coming days, that tells us the drop was just a technical adjustment, not actual weakness. So be careful and don't get fooled by scary candles. Know what's behind the move. Income investors just got paid. The price drop? That's not selling. It's all an illusion. Stay focused on what matters. Price action, context, and the trend of the underlying stock. The chart tells the story, but fundamentals give it meaning. We need to stay in touch with both.